What's up, everyone? We're back today, and I'm going to talk to you. I'm speaking to you. If you're a business owner who's getting crushed in taxes, this video is for you. This is for a business owner owning over $500,000 who's aggressively looking to build wealth and slash their taxes at the exact same time. This isn't for a business owner that earns $500,000 and spends $600,000. This is for the business owner who's doing it all right. They're getting crushed in taxes and they're trying to build wealth for them and their family. Now tell me if this sounds like you. You have a qualified plan through your business. You've got a 401k, a SEP IRA, you're maxing it out, you're capped out on that. And then you get to the end of the year and you're robbing Peter to pay Paul and you're pulling the rabbit out of the hat. Your CPA's telling you to go buy another piece of equipment. You say, I don't need another piece of equipment. And they tell you to go buy a truck. And you're like, I didn't buy the truck I bought last year. And so you're just constantly inventing new ways to try to deduct your taxes because you're always in a reactionary position. And you're constantly thinking, is there a better way? Could this be more simple? Could I be building wealth while slashing my taxes? The answer is yes, but you just have to know what to do. And frankly, your CPA just may not be fully aware of what you can be doing as a high earning, high net worth business owner today. So let's dive right in, and not to pour salt on the wound, but we're going to do a recap on the type of person who I'm probably speaking to. Or if you're a business owner getting crushed in taxes and you're thinking about retirement, you're like, hey, I probably should start putting money away. I've heard I could set up a 401k or a SEP IRA. What do those even look like? I'll educate you as well. But let's say you're also a business owner. You've set up some retirement plans and you're capped. And so the more traditional options I'm going to summarize today for you high earning business owners is you could have a 401k with a profit sharing plan or a SEP IRA. Those are really your two outlets to save the most amount of money and deduct it off your taxes at the exact same time. So you're a big shot, you're earning $500,000. If you're watching this video and you're earning more, just calculate the math in your head. And your max contribution in either of these plans is $70,000. So not a huge percentage of your income that you can set aside for retirement and also deduct on your taxes. If you're in a catch-up period, which means that you're between the ages of 50 and 59, that goes up a little bit. It's $77,000 to $77,500. And then the super catch-up is once you're above those ages, 60 to 66, you can put $81,000 away. So if you're a business owner making a good income and you're those ages, it helps you out a little bit because you can put a little bit more money inside the plans, but you're still pretty capped. And so I'm still going to just go off and say the $70,000. I'm talking to the person who can only do $70,000 today in this example. And your max tax deduction is $70,000. So you're putting $70,000 in, and now the rest of your income, you're left to go find the truck, go find the piece of equipment, go hire the employee that you really don't want to see every day, that drinks all your coffee and uses way too much toilet paper in the bathroom. I digress. Your effective tax rate at the $500,000 now, this will be a reality because some people are like, oh my gosh, I'm paying 50% in taxes, but they don't realize the difference between marginal and effective. And so you're not really truly paying, if you're earning 500. Now you add on state to this number, this is just the federal number, but your effective tax rate is 18%, which still sucks. So you're paying 18% of this 500 because, and this assuming, you're only able to deduct and, you're not deducting anything else. But the question is there a better way? Is there something you can get access to as a high earning business owner that gives you greater capacity? And the answer is yes. So the alternative is what's called a cash balance plan. How a cash balance plan works is it's a form of, pension plan from back in the day, but it gives you greater funding limits. And so a lot of times it's on a 5-year window, you're funding the plan for a period of time, and it's based on how old you are and the income you're showing. So depending on what your income that you're showing through the businesses is going to determine how much money that you can sock away inside the plan over really a 5-year period of time initially. And so income helps. What I will tell you is I have like a 60-year-old client. He actually has a W-2 job, and then he has $1 million consulting business on the side. He only shows $75,000 from the consulting business. That's $75,000 at the age of 60 allows him to put up to $315,000 a year into the cash balance plan. So it doesn't take a lot of income to get significantly more funding capacity. And he's also maxing out his 401k. You can do both. It doesn't take a lot of income, but you have to be showing something. So if you're a business owner that shows no income, we'd really have to educate you and help you, re-engineer how you're filing your taxes to maximize your capacity to build wealth and taxes at the exact same time. So you got to show an income, and then depending on your age, because once again, he's 60, so if you're a little bit younger, maybe you're a little bit capped on what you can put in. And if you're older, you can have quite a bit of funding capacity. You can put all the way up to almost $1 million a year inside of a plan. So there's a lot of capacity, but it's based on those pension cash balance rules inside of the IRS tax code. There's also flexibility depending on what you put inside the plan. So depending on the type of asset that we put in, whether it's a traditional type of 401k, or you can actually put life insurance inside of it. There's things you can weave into the cash balance plan to meet other business objectives, other planning objectives like estate planning. But depending on what's inside of it will either increase or decrease your funding capacity. And so it's the cash balance plan that allows you to actually save more money. It's the same $500,000. Now your max contribution in this example is $300,000. So once again, you're the 60-year-old. So if you're 60 today watching this, you can put $300,000 in. But the unique thing about the cash balance plan is it's called a total deduction. So you actually get to deduct the full amount off of your tax return. So it's $300,000 of the $500 that gets to get fully deducted off of your taxes. So now you go from $500 to $200, and you didn't have to buy any equipment, you didn't have to buy another truck, you didn't have to buy another business. You just set money away in a tax favorable, tax friendly, it grows tax deferred. And once again, we can engineer the plan in a way where you can do things like Roth conversions, fund life insurance, tax-free assets, and actually re-engineer it in a way to actually not have all the upfront tax hits like a typical Roth conversion. So it has great flexibility inside the plan. Meanwhile, you're only showing $200,000 on your tax return, which is a healthy amount. You can find other things made to deduct off of that, mortgage interest, whatever it may be. But we just cut your tax bill quite literally in half. Now your effective tax rate is 6.7%. $56,000 in immediate tax savings just by keeping the money in your pocket, re-engineering it into a cash balance plan instead of just doing the typical method of set up a 401k, set up a SEP IRA. It's for the business owner who's earning over $500,000 and you want to set aside $100,000. If you're looking to go buy equipment, expand, reinvest in your business, this isn't for you. But if you're trying to say, hey, I'm trying to get caught up on retirement, I want to build wealth. Not only that, I want to build wealth in a tax efficient, tax favorable environment. The cash balance plan is for you, but it's only if you're focused on those things. And so hopefully today this gives you an idea as a business owner, as a high earning business owner, high net worth business owner, an easy, simple shift. It's something that you can do and shift from what you're doing within 2 weeks. You could have a different plan in place, move your dollars around, and have almost unlimited funding capacity to deduct your tax bill. Another key benefit of the cash balance plan, it allows for retroactive planning. So if you're watching this today and you filed an extension on your taxes, when you file an extension, you have till September 15th of the following year to establish and fund the plan to deduct the prior year's taxes. So today it's 2025. You have until September 15th of 2025 to deduct your 2024 tax bill. And then let's say you've already paid 2024 taxes. Well, you could establish a plan and get ahead of your 2025 taxes And if you need to file an extension, you have till September of the next year to get those deductions in. So it's a very unique tool. Allows greater flexibility that most qualified plans do not allow you. And once again, it can be structured to meet other business objectives and risks inside your planning from inside the plan. So if you're a business owner earning over $500,000, looking to aggressively save, build wealth, and cut your tax bill in half, and you're looking for professional guidance and expertise to know, is this a fit for you, your business, and your family? That's what we do. We help people like you every day cut your tax bill in half and aggressively build wealth at the exact same time. I'm going to drop a link to my calendar in the description of this video. As always, it's not rocket science, it's just revolutionary.